242,000, much better than expected. A handful of all of you were right. Steve Moore, you were feeling it a little better this last month. So was I, feeling like the sentiment, we're getting a better feeling out there. What changed in the last month to indicate this much better than expected showing for jobs?
Well, this is a really good number, given what we were all expecting, and so I'm very cheered by this number. I think there's just a little bit, it's the animal spirits. I think they've picked up a little bit in the economy. I am worried about the fact that the work week is shrinking. That's a negative thing. It's a good thing that more people are in the labor force. And one other quick thing, you know, for the last number of years, we've seen high job growth in healthcare and education. And look, that's fine, but, you know, you're not going to create a big growing economy by hiring nurses. You know, we need more manufacturing jobs. We need more business jobs and so on. And that's where the economy has been weak, I think, in areas where you would expect, you know, a kind of collateral benefits from these jobs. We can't build a first-class economy on education and healthcare.
Yeah, but what you're mentioning is really where the weak spots were, right? I mean, and have been for the last couple of years, manufacturing jobs.
Yeah.
Darryl, you were right on the money. You were expecting a number in this neighborhood. You got it. Markets are rallying. Would you sell into this rally or buy it?
No, I'd buy it. The economic data is strengthening, as Steve said. In particular, I think the important point to take away, too, is the manufacturing sector is hitting an inflection point. We're seeing stronger industrial production. We're seeing stronger durable goods orders. That has been so weak of late. It's starting to tick higher. The consumer's coming down a little bit, but overall, economic data is strengthening, not weakening.
By the way, that's because of lower oil prices. Lower energy costs are good for manufacturing. I made that point month after month. We're starting to see it.
Yeah, we're finally seeing some reaction to the oil price.
And you see reaction in these stock markets is because you have these very solid job gains, but wages fell. So there isn't that inflationary pressure that some people have been talking about and writing about that the Federal Reserve would worry about coming up.
Yeah,
so question. So obviously fuel is an input to manufacturing. That's a good thing. But to me, that doesn't create jobs. They need customers. And everyone overseas is paying with more expensive currency now because the dollar's so high. So their currencies are more expensive, tougher to buy our stuff. This economy is growing very slowly. So to whom are the manufacturers selling? I'm surprised by this number.
I think it's outside of energy and mining specifically. I mean, we've seen a nice base come back into the industrials. They're the biggest benefactor, right, of both cheap energy prices and a moderating dollar, right? Remember, the dollar this year hasn't really strengthened that much. It's kind of been flat trend line. And I also think that you end up having industrials got too far oversold. The transports have taken off again lately, right? So there's some signs of normalization. Let's not get too euphoric about it. And to Dagan's point, remember, we got 0.5 wage growth, 0.5% in January, a minus 0.1%, levels out to still 0.3 average hourly earnings over the last 2 months. That's still decent wage growth.
Joni, let's talk where the jobs are right here. I mean, you did call it in terms of health services. That's definitely one of the areas that we're seeing job creation.
Absolutely. And construction came back as well. I mean, we did expect that manufacturing was certainly going to be an area of concern. But I think one of the best things that I'm seeing in this report is the labor participation rate moving up to 62.9%. Having hundreds of thousands of people saying, you know what, I'm going to participate in the workforce is really a step in the right direction. And even though we did see wages fall, we have to remember these are hourly wages that are reported in this morning's employment situation report. So you're looking at the wages today are more of the lower level skilled hourly positions. So it's not wages across the board. So overall, I think the report really is a step in the right direction. I mean, for years, we've been seeing labor participation move in the wrong direction. So hopefully, you know, this was 2 months in a row that we've actually seen it tick up nicely.
Yeah, I'm glad you mentioned that on wages because I wondered if that was a worry for you. Steve Cortes, you were on the low end here. Are you buying this rally here?
No, I'm not, and I don't mean to rain on the parade or sound too gloomy, but I think there was something for everyone in this report. On the bearish side, the work week diminishing is a real problem. Wages, I think, are a monster problem, by the way. In a recovery, in previous recoveries, we get wage growth year over year up above 4%, even up to 4.5%. In this recovery, we've struggled to hold it even above 2%, and that really matters. And by the way, if you want to connect the dots between politics and the economic data that we're getting, if you want to explain the Donald Trump phenomenon, I think it's 100% about low wage growth. Regular Americans, and Joni's right, these are generally lower skilled people, but that's a huge part of our country, are not seeing their wages grow. They are seeing their health care costs soar, they're seeing tuition soar, and they're angry.
Yeah. In terms of, just really quickly, because Steve Moore brought this up, in terms of the health care jobs, it becomes dangerous because the government, with Obamacare and the size of Medicare and Medicaid, controls health care. So you have an entire industry that more and more people are part of that is driven by government and government spending. And it becomes this vicious cycle you can't break in terms of funding that.
Yeah, and
Maria,
I'm sorry, Steve, but Obamacare has been great for the healthcare sector, certainly. But it's also the aging population, which is also creating a lot of these jobs, and the demand.
But they're taken care of by the government, basically by single payer, which is Medicare.
Yeah, go ahead, Steve Cortes.
Go ahead, Steve Cortes. I'll chime in later.
Oh, no, I'm sorry, I didn't have a point there. Steve Moore,
I'll jump in, and I will say
that
the demographics that Joni and Dagan are referring to cause yet another problem, which is lower productivity. And we haven't seen good productivity for years. And I'm afraid that because of the aging workforce, we're just not going to see that growth. And there's other trends that just aren't there anymore. I mean, to look way back, go from 1900 to 1970, you went from 10% high school graduation to 80% high school graduation. We can't make that up again. An older workforce that's not seeing that education acceleration, you're not going to grow productivity, and that's going to hurt wage growth, and it's going to hurt GDP growth.
And by the way, that's why we need immigration, by the way. This is the worst time to shut down immigration, because immigrants are young workers coming in.